Welcome. In this video, we are going to analyze is Xcn coin ready to explode? Don't forget to subscribe, like, and please watch till the end to understand. When we look closely at the chart, a remarkable structure stands out. Price action has been trending downward for a period of time, moving in a bearish channel. This channel is a classic technical structure in which the price's highs and lows gradually descend, and the combination of these levels forms a downward trend line. However, such structures cannot last forever. Since there is no such thing as a perpetual downtrend or a perpetual uptrend in the markets, such downtrends usually reach a certain saturation point and give way to a strong reversal. Right now, the chart is starting to give some important signals that such a reversal is imminent. First of all, we can see that the price has touched this downtrend line more than once, and each time it has turned downwards. This confirms that this line is working as a serious line of resistance. But at the same time, this line becomes a barrier that the more it is tested, the more likely it is to break. This is because market participants interpret the continuous testing of a resistance level as a weakening of the selling pressure there over time. In this context, the fact that the price is approaching the falling trend line again and starting to persist there may indicate that the current downward pressure is now starting to be exhausted. In addition, the decreasing volume in parallel with this falling trend line is also noteworthy. Declining volume in downtrends indicates that the sell side has become reluctant and there is no longer enough selling pressure in the market. This usually signals a trend reversal. If this falling structure is broken by a bullish candle, it is not only a trend break but also the beginning of a new uptrend. In technical analysis, such trend breaks are considered very strong signals and often represent the beginning of sudden and sharp upward movements in prices. There are other positive details in the current chart structure. For example, the fact that the price has recently started to form higher lows suggests that buyers are now stepping in at higher levels and gaining confidence in the market. The presence of such structures, combined with a falling trend line, makes the possibility of an upside breakout much stronger. This is because rising lows are one of the key signals that the market is now buying the dips and preparing for a new bullish wave. Another positive sign comes from momentum indicators. For example, the RSI indicator may be rebounding after entering oversold territory on previous dips and now heading higher. This suggests that the price is re-energizing and preparing for a new move. If the RSI is about to break a resistance line, similar to the falling trend line, this could be another signal confirming that a similar breakout in price is likely. Momentum supporting the price will make the move much stronger and more sustainable if this downtrend is broken. This falling trend line works not only as a technical structure but also as a psychological barrier. When this line is broken, it is not only an important technical break, but also an important break in investor psychology. Breaking resistance gives investors confidence and brings more buyers into the market. This makes it easier for the price to move quickly and strongly upwards. In particular, such downtrend breakouts are sometimes combined with technical structures called breakouts. This means that the price breaks the trend line with a bullish candle, then makes a small pullback to test the broken line, after which it begins its upward movement. When this kind of structure occurs, it's a very safe buying opportunity for traders, because both the technical break has occurred and the retest was successful. This makes the likelihood of the uptrend continuing much stronger. But we can't decide the analysis only with trends. Let's look at other metrics. Keep watching. Elliott wave theory is one of the most powerful tools used to understand and predict price movements in financial markets. This theory argues that the rises and falls in the markets follow a certain pattern and rhythm. In the structure currently observed, there are strong signs that the early stages of Elliott waves have been successfully completed. In particular, the first and second waves are clearly visible. This suggests that we should now prepare for the third wave, the strongest and most aggressive wave in the theory. If this structure is healthy, the possible targets of the third wave could range from 1,618 to 2,272, according to technical levels supported by Fibonacci ratios. First, let's look at the character of the first wave. This wave usually represents the first spark in the market. That is the period when the uptrend has started, but traders are not yet fully convinced. Those who buy during this period are usually experienced and early movers. On the chart, this first wave may have attracted attention with a strong and clear upward movement. The second wave that follows is usually a correction, retracing part of the first wave. However, this retracement does not mean that the main trend has lost its strength. On the contrary, the groundwork is laid for a new uptrend to begin. At the moment, the chart shows that the second wave has also been successfully completed. In many cases, this wave of correction shows a retracement to the Fibonacci 0618 or 0786 levels, which are quite common among traders. When the price finds support at these levels, it boosts buyers' confidence in the market. As a matter of fact, it is currently observed that the price is starting to react upwards from such support zones. This suggests that a major preparation for the third wave has begun. The third wave is known as the strongest and longest-lasting wave according to Elliott wave theory, because at this stage, most of the investors are now convinced that the trend has started and there is intense demand for buying. In other words, both investors who use technical analysis and those who make decisions based on emotion start to take positions at this stage. That's why the third wave is usually voluminous, decisive, and with a fairly high momentum. During this movement, the price leaves the starting point of the first wave far behind and may rise to the Fibonacci levels of 1,618, even 2,618 in some cases. One of the most important levels to watch out for at this stage are the target points calculated based on Fibonacci ratios. In technical analysis, these levels play a very effective role in determining both profit realization and new buying opportunities. The third wave is expected to reach at least the 1,618 Fibonacci extension level. This represents a rise of 1,618 times the length of the first wave. Once this level is reached, we can see how strong the market is in a buying wave. If the buying pressure continues, it is quite possible that the price will extend to the upper Fibonacci level of 2,272. These levels are technical resistances that traders can target on the chart. It is also worth noting that the third wave is usually the most voluminous and the most noticeable. During this wave, new traders enter the market, media attention increases, and bullish momentum accelerates with positive news flows. This period is also referred to as the wave of optimism, as the majority of investors are now convinced that the uptrend is sustainable. This psychological effect makes it easier for the price to go even higher. During the third wave, patterns also become clearer. For example, the price sometimes forms continuation patterns such as flags, pennants, ascending channels, or symmetrical triangles. These patterns look like resting moments of the uptrend, and then the trend continues with a new bounce. Therefore, the target levels may need to be constantly updated along with the technical patterns. However, the main target is always between the Fibonacci 1,618 and 2,272 levels. The Relative Strength Index is one of the most widely used and reliable indicators in technical analysis. The main task of the RSI is not only to determine whether an asset is in overbought or oversold territory, but also to assess the direction, strength, and stability of the momentum in the market. Trends on the RSI are particularly valuable as they show us the inherent strength behind price movements. Currently, the uptrend observed on the RSI paints a very positive picture. Maintaining this structure and the RSI line touching this bullish curve will be an important indicator confirming that the market is in a healthy uptrend. First, it would be appropriate to explain what an uptrend in the RSI means. The RSI is an oscillator that moves between 0 and 100 and is generally considered overbought above the 70 level and oversold below the 30 level. We must follow the RSI trends or we will not find the direction. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.